How does a tax assessor appraise your property? Have you ever wondered how a tax assessor figures out the value of your property? Understanding this process can help you better navigate your property taxes. Let's break it down. A tax assessor's main job is to estimate the fair market value of your property. This is the price your property would likely sell for under normal conditions. This value is what determines your property taxes. To figure out this market value, assessors use three main methods. First is the market approach. Here, the assessor looks at similar properties in your area that have recently sold. This method works well for residential homes, vacant lots, and farms. Next is the cost approach. In this case, the assessor calculates how much it would cost to replace your property with a similar one. They consider current labor and material prices, then subtract depreciation, which is the loss of value due to wear and age. Finally, they add the land's market value. This method is often used for industrial properties or special purpose buildings. The third method is the income approach. This is used for properties that generate income, like rental apartments. The assessor estimates how much income the property can produce. They then subtract operating expenses, insurance, maintenance, and financing costs to determine a value based on expected earnings. Once the assessor estimates the market value using one or more of these methods, they apply the local level of assessment. This is often a percentage of the market value. For example, if your property is valued at $100,000 and the local assessment level is 27%, your assessed value would be $27,000. This assessed value is then multiplied by the local tax rate to calculate your property tax bill. To ensure consistency, assessors often use computer-assisted mass appraisal techniques. This helps them analyze multiple properties efficiently. If you think your property has been overvalued, you can appeal the assessment. You will need to provide evidence that the assigned market value is inaccurate. This could include comparable sales data or other relevant information to the local tax authority. In summary, a tax assessor appraises your property by estimating its market value through standardized methods, adjusting for local assessment levels, and using that assessed value to calculate your property taxes. Understanding this process can help you feel more informed about your property taxes and your rights as a property owner.